If you invest in international funds, those funds' returns have risen sharply, mainly because of the depreciating rupee. So do international funds offer us a good hedge against Indian equities, and should we be using these funds to gain a currency advantage? Let's ask Dhirendra Kumar, the CEO of Value Research, who joins us now to answer our questions every day. Dhirendra, thank you so much for joining us. One particular fund, the Most Shares NASDAQ fund from Motilal Oswal, has done phenomenally. Now, this is a fund you've been recommending on the channel for at least a year now. Let's take a look at those numbers. The fund is a top performer over the last 1 month. Returns of 7.5% against negative 0.8% on the Nifty. Is this a fund you recommend to investors to add to their portfolio?
Yes, I like this fund for completely different reason, not because our currency is depreciating. This month, the 7.5% return that we see, 5% of that can be attributed to the currency movement. But that is not the basic premise for which one should be buying this fund. This fund should be bought because NASDAQ 100 comprises of globally competitive businesses and global businesses, dominantly technology companies, and I think they hold promise. The way the world is changing, the way our dependence on Google, the way Apple is on forefront, they are fast-growing businesses, and they are global businesses, though they are domiciled in the US. So that is the basic premise for which I like this fund. And currency movement can actually work to the disadvantage as well. If you look at 26-month history of this fund, and of these 26 months, in 12 months the fund has actually has been at a disadvantage because of we have also seen an interim period when it has suffered on account of the currency movement. And yes, of late it is benefiting more.
But Dhirendra, should this be part of our long-term portfolios, and what sort of risk would be associated with investing in a global fund? Should we be using an SIP? Should we be putting money in as a lump sum, timing perhaps that currency market? What do you think we should do? How should we approach this fund?
No, I think individual investors should resist that temptation to benefit on the currency front, because that could be hazardous. It's very difficult to time it, and things turn around when you least expect it. Here the risk is much higher in terms of timing it, because the reason why one should have this fund is because most of us have the home bias. We invest dominantly in the companies and the funds we know, which are generally local companies. So we should diversify. That's the basic premise why one should invest in a mutual fund. And investing in this fund, we should diversify beyond our own market, and we should choose a good investment vehicle. That is the case for this fund. But the added disadvantage is that you will have the currency risk added to the valuation risk of a different geography. So, staggering your investment, spreading your investment, not trying to time it, being regular with your investment is far more crucial than a domestic fund.
But Dhirendra, what portion of our portfolio should we be investing in international funds? 10, 15, 25%?
Yeah, I think so. One should make a modest beginning. And it should certainly be 10-15%. Whether it should be just one fund or it should be beyond one geography is a question to ask. But international fund can well be 15-20% of one's portfolio.
15 or 20% of our portfolios is retail investors. We could invest in international funds. The Most Share NASDAQ giving us one example of a fund that offers you diversification across the globe and across different markets. But we have a question for you, Dhirendra. Inder has written in from Bangalore. He tells us that in spite of the fact that all international funds are doing well, given that rupee depreciation, the DSP BlackRock World Mining Fund, which he has been investing in, has had a dismal performance. He wants to know if he should continue investing in this fund or should he give up and exit. If we look at the returns on that fund, it's actually been in the negative over 1 year, over 3 months as well. Should he give up, or should he at all be taking such a specific exposure to mining?
As I said earlier, that one should be investing internationally primarily to diversify. But exactly the way we say about a domestic fund, that one don't get into a sector fund unless you think that there is something completely amiss in your portfolio. Likewise, avoiding a thematic fund is important. This is a fund which is heavily dependent on a commodity cycle, and things have turned around, and that is why we see the disadvantage despite the depreciating rupee. So it should not have been in the first place. Individual investors, their focus should be to diversify, and this is not a great way to diversify. One should consider exiting this fund.
All right, Dhirendra, thank you so much for joining us this afternoon and answering our questions on investing in international funds.